We go to chapter 4, business documentation. So when we talk about business documentation, businesses, they do transactions, yeah, but they need to make references to every transactions they do. So that means it's important to have a document. Because without a document, you won't be able to trace back whatever transactions you've done. So it is important. And that's why we even have bookkeeping. So here I was. Documentation is important in accounting. It gives references to dealings in the past between business to business or business to customers because of their trading. So not only because you have to have records of your supply or customers because they are owing you, you also need to have records of your suppliers because you might also be owing them. You get it? So that's why we have business to business, B2B, and business to customers, B2C. Either ways, you need to have records of your transactions because you have traded. So what are the different types of business documents we have? We have the purchase order, we have the invoice, we have the credit notes, we have the statement, and we have the remittance advice. So we'll take it one at a time. Go to purchase order, please. Purchase order. So for purchase order, I wrote here, it's the document sent by buyer to order goods from supplier. So whenever you need to buy a product from the supplier, you need to make a purchase order, listing those things that you need from your supplier. That's why we need a purchase order. Do you understand what a purchase order is? So what does a purchase order contain? It contains the name and address of your supplier, the purchase order number. That means this will be part of the order, the number on the order form. Then you have the quantity required, the amount, the number of products you want from your supplier, delivery date, the day you want it to be delivered to your premises, details of goods or services, the kind of products you want, and your signature. So that's how a purchase order looks like. I think you can see it there. So for the purchase order, we have the quantity, that's the amount of the number of products you want, the kind of product you want, the unit price, the amount for each product, and the total price, which is the unit price multiplied by the quantity. I think it's clear.
Yes.
Great. So we'll go to an invoice. When we talk about an invoice is a document prepared by the seller when he or she sells goods or provides services on credit. So the supplier sometimes sells. So when he or she sells on credit to a customer, then he or she needs to give out an invoice stating that, oh, customer A, you bought this product, but you haven't paid. That's why an invoice is issued. I think it's clear.
Yeah.
So what are the details contained in an invoice? So seller's name and address. That's the supplier's name and address. The credit customer's name and address. What goods was purchased on credit, the quantity purchased, the price per each item, and the total amount. I think it's clear. That's an invoice. Here we have the details of an invoice here. Then we go to the credit note. So what makes up a credit note? For a credit note, it means the customer, the supplier has accepted that certain goods, certain amount of money will be deducted.
What about invoice?
We just did invoice now.
It's a little bit.
You want me to go back there?
Yeah.
Okay. Yeah, for an invoice, I said it's a document issued by the supplier to the customer stating that, oh, customer A, you have bought on credit, you haven't paid. So that's why we issue an invoice. Is it clear now? Should I move on now? Okay. So go to the credit note. Are you there?
Yes.
Okay. So sometimes sometimes we have to return some goods that we bought from our suppliers, our credit suppliers. So if we have to return these goods, as a buyer, you need to issue a debit note stating that, oh, requesting the supplier to take certain amount of money away from the money you are owing the supplier. So you issue a debit note. So in the course of you issuing a debit note, the supplier would accept. If he or she accepted, then he or she is going to issue a credit note stating that, oh, customer A, I have accepted the debit note based on the goods you are returning. So I will deduct this amount from the amount you are owing us. Do you get it? So that means the customer is returning certain products, certain quantity of the product he or she has bought from the supplier. So instead of paying the full amount originally on the invoice, the customer will be paying the amount left when the returned goods have been deducted from the original invoice. So if you issue a debit note as a customer to the supplier, if I'm accepting that you should return the goods, then I will issue a credit note. So the credit note will state that I have deducted the amount of the returned goods, the value of the returned goods that you returned. Is it clear?
Yes.
So a credit note will never be issued by a supplier without seeing the debit note from the customer. Is it clear? So how does a credit note look like? So we have a credit note there. Can you say figure 4.5? Can you say that? 4.5. Yes. Okay. So we have the credit note, the supplier, that's the amount. Rivet Rugby or Football Club, that's the supplier. Company Gamson Sport, that's the customer. Then the quantity, that's the number of products returned, that's the quantity too. Description, the kind of product returned. Unit price, the price of the product returned. Then the total amount, the total value of the product returned. I think it's clear. The reason for this credit note or reason for deduction, faulty stitching. So that means there are different reasons why you could return a product to your supplier. One of the reasons is that one, the product was brought to your premises in a bad condition. Two, the product might have expired. Another reason is the quantity you requested for was more than what they gave to you. That means you requested for 100, the company mistakenly supplied you 120. And if the company has supplied you 120, the invoice will be issued as 120, as the amount will be based on the 120 products. So you needed 100, so your invoice should count 100, not 120. So that means you have to issue a debit note. Is it clear? So these are the reasons why you might return goods as a customer. One, the quantity was more than what you expected. Two, the product was brought to your premises in a bad condition. Or three, the product are expired.
Yeah.
Is it clear? Is it clear, please?
Yes.
All right. Then we have a case study. Yeah, hold on, please. All right, now the case study. It said, Scott Leon, read it, please. Scott Leon.
Scott Leon has been in business for many years. He sells consoles and computer games in his shop. Scott doesn't always keep his source documents in an organized file and gets confused by them. He has found the following transactions, but is not sure what source document goes with them. Complete the table below to help him locate the correct source document for each transaction.
Scott Leon is just that kind of person who is a confused business person. So we have to help him out. So first, paid for stationery in cash. That means you've made the cash payment. If you made a cash payment, you get a receipt. The source document will be a receipt. You paid for stationery in cash. You made the payment.
Yes.
You paid for stationery in cash. So the source document for that stationery would have been a purchase order. That means you would have ordered for a stationery. You ordered for a stationery. That's why you made the payment, right? So that's a purchasing order. Do you understand that? Purchase order. So that's the source document. Deposit taken into his own bank account. He made payment into his own bank account. That's going to be a deposit slip. When you have to when you have to make payment in your bank account, you have to go with what? A deposit slip stating the amount you have to pay that you want to deposit into your bank account. Use a deposit slip. Then the third one, purchase inventory on credit from D. Shield. Purchase inventory on credit. The source document but wait, he sells. He sells, right? He's one that sells. Scott Leon sells. So now, paid for stationery. Okay. Sorry, for the first one, because he sells. So he bought stationery. He would have received, okay, yes, good. Purchase inventory on credit from D. Shield. If he purchased from...
What's D. Shield?
The name of the customer. The name of the supplier.
Okay.
So you would have gotten an invoice for that.
Mm.
Okay. Receive payment from a customer by credit transfer. When you receive payment from your customer by credit transfer, that means you'll be getting a receipt. That's the source document. Is it clear?
Yes.
Okay. And the last one, return inventory to a supplier that had previously been brought on credit. When you return inventory, that means you are returning part of the goods to a supplier.
Mm.
Then the supplier would have issued you what? A credit note.
Credit.
Do you understand? So you would have received a credit note from the supplier. Is it clear? Is it clear, please?
Yes.
Okay. Then we'll go on to statement of accounts. For statement of accounts, here I wrote, this is a document issued by the supplier to credit customer, detailing the outstanding payment for the month. It will also include the credit notes. Whenever you have to remind your customers to come make their payments, you issue what? A statement of account. It shows them the amount outstanding. Do you understand what a statement of account is here? It's a document reminding credit customers about their outstanding payments. So they should come and pay.
Mm.
So it will come with a credit note because most of the time, maybe the customer has returned certain goods to you. So you have to deduct it from the statement of account. So you attach the statement of account with the credit note. Is it clear? Are you with me, please?
Yes.
Okay. So look at how a statement looks like. The date, that's the purchase date. The references will be the invoice. The debit means the amount of the product. The balance is there, which is the amount the amount of the products. Then the date of the returned goods will be on the credit note. The day the customer is, or the supplier is sending you the credit note will be stated on the other date. The amount, the value of the debit note, that the credit note, the value of the credit note the supplier has issued back to you will be taken away from the total amount you are owing the supplier. Then you have the total outstanding that you have to pay. So in your statement of account, you're going to have the outstanding payment. That's 376. Is it clear?
Yes.
Then we go to the remittance advice. So for remittance advice, it is a document issued by the buyer when payment is made to supplier, showing the details of the recent transaction and the final outstanding. So you as a buyer, it's more like the statement of account, but the statement of account is being issued by the supplier. But whenever you have to make payments, you can attach the payment with the remittance advice, especially if you are paying with check. So, you might not be able to put up details of what you have bought from the supplier, but you have the remittance advice to state the details of what you have bought from the supplier and what the value of the check is about. Do you understand? Do you get my point here?
Yes.
So remittance advice is issued by the buyer when he or she wants to make payments to the supplier. Clear, right? So we have how it looks like. The remittance advice, you have the date of purchase, the date of returned goods, the invoice or credit note. That's the invoice, the number on the invoice and the number on the credit note, the amount of the invoice on the invoice, the amount to be deducted on the credit note, then the total payment you make. So the difference between the statement of account is that the statement of account will have your outstanding payment, but the remittance advice will have your total payment. You get the difference here? Is it clear, please?
Yeah.
Then we have the receipts. For the receipt, it's just an evidence of payment. That, certain amount of money has been paid, and this is the evidence for it.
Yes.
Clear, right? Great. Then we have the exam practice. Please go to the exam practice. Are you there? All right. So the first question says, which document from a supplier reduces the amount owed by a customer? When the supplier is taking away the amount you are owing him or her, what document is issued by the supplier? Credit note. Thank you. Yeah, Nancy is a trader. She returned goods to her supplier. Which document will Nancy send to her supplier? The answer is a debit note. None of these options are right. The answer is a debit note. Yeah, Nancy will issue a debit note to her supplier, then her supplier will issue a credit note. Is it clear? So the answer is a debit note too. The options are wrong. Okay. Yeah. Question 3. Which task is carried out by a bookkeeper? A bookkeeper will do what? Will record information.
How?
You keep records. That's why you are a bookkeeper. Bookkeeper. You record information.
Oh,
Do you understand? Analyzing, assessing, and interpreting is the work of an accountant.
yeah.
But a bookkeeper is to keep records of the transaction. Is it clear? Is it clear, please?
Yes.
Question 4. Paul had the following transaction with David, a new customer. So we need a calculator here, okay? Now they said, March 4. I have a calculator already. So look at what the transactions is. What they need is how much is paid by Paul. Goods invoice to David was 350. That means 350. David is owing 350 to a customer, right? To Paul, 350. Then David issued a debit note. You see now, debit note received from David. So that means the honor I told you is wrong. David is a customer here. So he has issued what? A debit note. To who? To Paul, which is the supplier.
Yes.
So they made mistake there. Is it clear?
Yeah.
So a debit note was received from David, $25. It's not going to count. It's not going to be debited or credited because David is just requesting that this amount should be taken away. It is for the supplier to accept or not to accept. So it's not going to be recorded. Is it clear? So you still leave it as 350. Then now, Paul issued a credit note of $20. David issued $25. But Paul said, no, I'm going to only take away $20. So that means minus $20. Are you getting it? Yeah. So now we have 330. Credit note issued to David 20. We did that. Check received from David. David make a payment to Paul for 300. That's minus 300. You get it? So we have 30. Now goods invoice to David. David received some goods again, amount 470. That's plus 470, making 500. Then check received from David. David make a payment of $30 minus $30. So how much is Paul owing? David owing Paul 470. So let's check the option. Yeah, they said Paul sent a statement of account to David on 31 March. What was shown on the balance due date? 470. Is it clear? A. The question 5. Anakin sells goods on credit to Caleb. 4 documents were issued during July. Copy and complete the table below using a tick to show who would issue each document. Invoice will be issued by Anakin because it's a supplier. Yes or no?
Yes.
Credit note will be issued by Anakin because credit note will be issued by Anakin.
Who?
Anakin is there.
Anakin.
Yeah, he's the one that Anakin or whatever the name is. So it's going to be the one to issue a credit note. Are you with me?
Okay.
Then the purchase order will be issued by Caleb. Purchase order.
Yeah.
Then the statement of account will be from who?
Anakin.
Anakin. Thank you. So that's all about that. So we end the chapter there.